Let me ask you something, and I want you to be honest with yourself. When you check your bank account and see a decent balance sitting there, you feel safe, right? Like you're doing something right, like you've got control. But what if I told you that feeling of safety is exactly what's keeping you broke? Because the truth is, and banks will never say this out loud, your money sitting in that account is slowly being destroyed every single day. And not only that, the system is actually designed so that your money works harder for the bank than it ever will for you. Today, we're exposing that system. This is the dirty secret banks don't want you to know about your money. And by the end of this video, you're going to look at your bank account very differently. So let's start with the part no one talks about, inflation. It sounds boring, it sounds technical, but it's quietly one of the most powerful forces stealing from you. Here's how it works. Every year, the cost of living goes up. Food, rent, fuel, education, everything gets more expensive. Let's say inflation is 4%. That means the money you have today loses 4% of its value every year. Now here's the problem. Most bank accounts give you less than 1% interest, so do the math. You're earning 1%, but losing 4%. That's a net loss of 3% every single year. You're not saving money. You're watching it shrink silently, slowly, and most people don't even notice. Think about this for a second. 10 years ago, a certain amount of money could get you a comfortable lifestyle. Today, that same amount barely covers the basics. The number didn't change, but what it can buy absolutely did. And that's the first illusion. Your bank balance looks stable, but its real value is going down. Now let's talk about the second secret. This one is even more uncomfortable. When you deposit money in a bank, it doesn't just sit there. Banks operate on something called fractional reserve banking, which means they are allowed to lend out the majority of your money, in many cases up to 90%. So if you deposit 1 million, the bank can take around 900,000 of that and lend it out to someone else. They charge interest on that money. They profit from it. And you get a tiny fraction in return. Your money is working, just not for you, for the bank. That's the business model. And once you understand that, you start asking a very important question. Why is my money sitting idle while everyone else is making money from it? So the real question isn't, should I keep money in the bank? Of course you should. You need liquidity. You need emergency funds. But the real question is, how much is too much? And what should you be doing with the rest? This is where everything changes, because once you understand the problem, you can start using the solution. And the solution is simple. Move your money from being idle to being productive. Let's start with one of the safest and most overlooked options, government-backed securities. These are things like treasury bills or bonds, and here's why they matter. They are backed by the government, which makes them one of the lowest risk investments in the world. But unlike a savings account, they actually pay you a meaningful return. In recent years, short-term government securities have offered returns around 4 to 5% or even higher. That alone beats inflation in many cases.
So instead of losing money quietly, you're at least protecting your purchasing power and sometimes even growing it. This is what smart money does. It looks for safety but refuses to accept stagnation. Now let's talk about something that has built more wealth than almost anything else: real estate. I know what you're thinking. That's for rich people. But that's not entirely true anymore. Yes, buying property outright requires capital, but today there are ways to invest in real estate without owning an entire building. Real estate investment trusts, REITs, allow you to invest in property just like you would invest in stocks. You get exposure to rental income, you benefit from property appreciation, and you hedge against inflation because when prices go up, property values tend to go up too. And if you do own property, it becomes even more powerful because now you're generating cash flow, monthly income, something your bank account will never give you. Cash in the bank sits still. Real estate works. Now let's move to something even simpler and more powerful over time: index funds. This is where ordinary people quietly build extraordinary wealth. An index fund is basically a collection of companies. Instead of betting on one business, you're investing in the entire market. Historically, markets have grown. And over long periods, 10, 15, 20 years, they've delivered strong returns. We're talking around 8 to 10% annually on average. Now yes, there are ups and downs, there are crashes, there are corrections, But over time, the trend has been clear: growth. And the beauty of this is simplicity. You don't need to be a financial expert. You don't need to predict the market. You just need consistency. Even small monthly investments compound into something significant. This is how wealth is built quietly, not overnight, but steadily. While your bank account is losing value, this is doing the opposite. Now here's the one most people ignore: gold. For thousands of years, gold has been a store of value. Empires have risen and fallen. Currencies have collapsed. But gold, it has survived through all of it. Why? Because it cannot be printed. It cannot be manipulated the way paper money can. And during times of uncertainty, people run to gold, which is why its value often rises when everything else feels unstable. Think of gold as financial insurance, not something you go all in on, but something you hold just in case. Because when systems shake, gold tends to stand firm. Now maybe you're thinking, this all sounds good, but I'm not ready for big investments. That's completely fine. Let's bring it down a level. High-yield savings accounts. This is one of the easiest upgrades you can make. Instead of earning almost nothing, you move your money to accounts that offer significantly higher interest. Same liquidity, same accessibility, but better returns. It's a small shift, but it makes a difference. Similarly, money market funds give you low-risk exposure to short-term investments with better returns than traditional accounts. This is your starting point. If you're not investing yet, at least stop losing money unnecessarily. Now here's the final asset, and honestly, it might be the most powerful one of all: yourself, your skills, your knowledge, your ability to earn. This is the asset no one can take from you. No market crash can wipe it out. No inflation can reduce its value. If anything, it grows over time. Think about this. If you spend a small amount learning a high-income skill, and that skill increases your income, that return is massive. Not 5%, not 10%, but sometimes 10x, 50x, even 100x over time. Learning how to communicate better, learning how to sell, learning technology, understanding money itself. These are investments, and they compound for life. The wealthy understand this. They don't just invest in assets, they become assets, and that changes everything. So let's step back and look at the full picture. Keeping money in the bank feels safe, but it's not as safe as it looks, because while you're doing nothing, inflation is working against you, the system is working against you, and your money is losing value. Quietly, consistently. But the moment you shift your mindset, everything changes. Instead of asking, how do I save money? You start asking, how do I make my money work? And that's the real game. You don't need to do everything at once. Start small. Pick one. Understand it. Take action. Then build from there. Because financial security isn't about having the most money. It's about making sure the money you have is actually doing something, working, growing, protecting your future. And once you see that, you can't unsee it. So the next time you check your bank account, don't just feel comfortable. Ask yourself one question: is my money working for me, or am I working for my money? If this opened your eyes even a little, hit that like button. It helps more than you think. And if you want me to break down exactly how to start with any of these assets, drop a comment below.